Good afternoon, everyone. I hope you are all doing well and staying safe. I'd like to thank you, each one of you, for joining us for this AMA session today. And I'm super excited to welcome you all. Thank you so very much for your time. It's with my great pleasure to welcome two of the wonderful personalities on the online dais today, Mr. Ravi Narayan and Mr. Hemant Mohapatra. A quick introduction to both the speakers. Uh, Hemant, to start with the guest speaker today, Hemant is partner at Lightspeed India and also happens to be a poet, who excels at math. All his life, he has been attracted to careers where he gets to use both of his brains, both sides of his brain. His journey into the VC, however, was anything but a liner. It was at Google where Hemant led a growth investment in Ever Systems and Lightspeed company that later acquired by Microsoft, and that discovered his loving for investments and investing. Hemant has a right mix of operations, product experience, as well as deep networks in both India and US to help the startup ecosystem. Thank you, Hemant, for your time and accepting our request. It's a pleasure to have you today.
My pleasure. Thank you for having me.
Thank you, Hemant. Ravi is the Chief Executive Officer at THub. In a career spanning of over 2 decades, Ravi has been a product engineer, entrepreneur, investor, a mentor, and a leader. He has been actively involved in India's startup ecosystem and has helped many of the corporations and governments in implementing startup and innovation programs. Having seen every facet of this entrepreneurial journey, Ravi loves to spend his spare time in merging age-old wisdom from the scriptures and classic, which he experienced so on can lead a balanced and a fulfilled entrepreneurial life. Welcome, Ravi. Thank you. It's always great to have you in our sessions. Now,
thank you, Shankar.
It's a pleasure, Ravi. Now, I would like to request Ravi to introduce THub to you and take the discussion forward.
Yeah. So thank you, Shankar. Thank you, Hemant, for making the time. I like the fact that you use both sides of your brains and both your brains. So this is really a pleasure to have you here. So what I thought, Hemant, is I would take a couple of minutes to introduce THub because everybody seems to have a different picture of THub, and it's a very unique initiative. So I do that, and then we will start with the AMA part. Yeah. So, THub, so I wear two hats. One hat is tech entrepreneurship, which is THub. And I also wear another hat, which is the Chief Innovation Officer for the state of Telangana. So, that gives me an opportunity to learn something very, very different from what I have been doing my entire life so far, which is rural entrepreneurship, social entrepreneurship, and also mentoring governments. If you can imagine, we can do that, right? So I will introduce you more to the THub aspect of it today. And THub has been conceived. Yeah, if you can go to the next slide, Shankar. So THub has been conceived as not just as an organization that does a whole bunch of things with startups and corporates and investors and academia and government, which are the 5 stakeholders that we work with. But at the same time, we also feel that we are the epicenter of an ecosystem that is being built. So why is it that we are looking to do this? So I have pretty much done my third entrepreneurial journey in Bangalore. Bought a company out of the United States, Silicon Valley to be exact. Brought it here to Bangalore, tried to set it up, and then I found that the ecosystem that I needed was not there. So work with NASSCOM, with TI, with various other organizations to bring it to where it is. But at the same time, if there was anything that we could understand was a root cause analysis of what has happened, the positive and the negative, it was very difficult to do that. An ecosystem building is much more complex than that. Hyderabad happened to be at a place where it had all the right ingredients. It was to bring these different elements of the ecosystem together to make this thing happen. Obviously, all of them are not moving in the same direction. They're all pulling in different directions. So sometimes we feel like Draupadi, with these 5 different husbands that we need to take care of, to how do you really make this thing work. But thankfully, we have had some tremendous growth in the ecosystem over the last several years, and we continue to grow at a healthy clip as we go along. Next slide, please. So I just wanted to give you a sense of the strategy of THub. So one is about startup innovation. How do you really work with startups? We're not looking to work with early stage startups because we feel that there are enough and more people that have figured that out and are doing that so very successfully, be it in educational institutions or other very specialized institutions. So we start our work with them when they have reached kind of a seed stage, then on to pre-series A, series A, and so on and so forth. Obviously, our personal agenda is to make sure that we keep these startups in Hyderabad, and they don't necessarily have to move out to get the rest of the support that they need to graduate to um, graduate to a global player, and then seek investment opportunities, exit opportunities, and so on and so forth. So that is for us the supply side of innovation, startups. On the demand side of the innovation, we work with 2 entities. One is the government, of course, which I also do with my other role. But the larger corporations, the corporations that are out there, they've already built inroads into the market. They understand the markets well. The relationship with the customers exist, and they are probably privy to lots of challenges that their customers are facing, and they need to move quick, especially in these pandemic era. Moving quickly, addressing them is paramount for them to continue to retain market share or maybe even expand their market share. So how do we really help them through a collaboration with startups is what we do in the corporate innovation piece, which is the demand side of innovation. And then ultimately, we also do a lot of ecosystem innovation. Is how do we build the ecosystem to, have the capacity of mentors, investors, other incubators that are wanting to set up, and so on. And also, we use this opportunity to make Hyderabad the go-to place if you really want to go to the global markets, and vice versa. If you the global startups like we have today, startups from Korea, from Japan, from Australia, from the UK, all looking to enter India because they find it a very interesting, exciting market, with the digital infrastructure in place and the growth rates that they would like to get access to. They are working with us. Of course, today they're working with us on a remote basis, in a digital fashion. But we're hoping that they will also start arriving here and working with our customer base that we can give them access to. So this is kind of the large picture of how we are building THub from from a concerted way rather than a serendipitous way that a lot of these other ecosystems have evolved. It's an experiment. It's worked so far. We'll see how far we can get with this. So that's where I would end the introduction for THub. With that, I will, of course, get you guys to start putting your questions into the Q&A box. I will, ask Hemant the questions that have come our way. I'll get this started as we are collecting questions in the chat box. So first of all, Hemant, once again, thanks for being here. You have moved to India from the US, and I'm sure there were some compelling reasons why you thought India was the right place and why you thought Lightspeed was the place that you wanted to land up in.
Yeah, thank you again for having me, Ravi, and the whole THub team. So I moved back to India after spending about 15 years in the US. I grew up in India, went to college here, then I went to the US right after 9/11, 2003, and then I stayed there. I wanted to come back several times in the middle, but it never really transpired that I could, so I ended up staying back. But eventually, finally pulled the plug in 2018. The reasons for me, I was already an investor at the time I decided to move back. I was investing with a company, with a firm called Andreessen Horowitz, also known as A16Z, back then. So for me, the choice was already made that I need to build a career in venture investing. And then two things became very apparent. At the time that I joined Andreessen, I was already thinking about moving back to India. And I realized very quickly that when venture is a 10 to 20-year business, as you would know, Ravi, and I didn't really see myself in the US for 10 plus years. Right. So my family was all here. A lot of my friends had moved back. This was the Trump era in the US, and people were pretty unhappy back then. And all of them had moved out, and I was already on the way. My dad had passed away a few years back at the time. So I was thinking I'm heading back somehow or the other. And I realized very quickly that, A, my life is going to be built in India. B, as a venture investor, it takes 4 to 5 years to really build any sort of portfolio, right? It takes 10 years to find whether you're a good investor or not in many cases. Some people spend their entire careers in venture and still are not, part of any big company. This is how the business is. So for me, it was very important that I be part of an ecosystem where I'm almost, if I work hard, if I get lucky once or twice, I could be part of a big story here. And I thought what I brought to the table, this whole India to US expertise, my network was global in nature. I've been exposed to companies like, AMD as an engineer, or, at Google as a product manager. I felt like I had seen what world-class looks like. And I felt like that could be a value addition to the founders here, and maybe that'll help me build a brand different from everybody else who's investing in this ecosystem. And it did help me. So I thought maybe I had a very strong, so to speak, product market fit at the time to come back to India. SaaS investing was still happening, but not at the pace it is happening now. And I was a pure SaaS investor. I felt like those things kind of added up really well for me, both personal and professional. And Lightspeed was a very easy decision. I spoke to a lot of the funds, huge respect for everybody else who's investing and has been around for 10 to 15 to 20 years in many cases, right? For me, I wanted to be in a fund that was operator led. A lot of people had founded companies before, had led teams before, had raised capital successfully or unsuccessfully. As you mentioned, my partner Akshay was mentored by you, who had done a startup, while he was doing it. So we had a lot of partners like that. Our entire team is, ex-operators. So I felt like I spoke the same language as them. And if you have to spend 10 years in any business, you rather spend with people that you really, really like and speak the same language. So this is why Lightspeed was an easy decision for me. Yeah, it's been really fun so far.
Great. See, operator led is absolutely a very important I guess criteria for a lot of startups that are looking for not just the money but also the connections and the past experience and maybe an empathy factor. If there's a way people listen to them differently, it's an operator led thing. And I think with the Indian ecosystem having second, third time entrepreneurs coming into the system, they even have greater, I think, affiliations to those operator-led VCs. So that was your thesis before you came here, Hemant. So how has it actually panned out over the last 4 or 5 years that you've been here?
I've been here 2 years
Your
now.
expectations have been met, or how is it going?
Yeah, I think about it a lot, right? AI, at least in the first or second year when I was here, I've been here since 2018, late 2018, so just about 2.5 years now. And in the first year, I used to be asked this question a lot, like, do you regret it? You were at one of the top firms in the Valley at the time. Silicon Valley was the hub of entrepreneurship, globally speaking, and you left all of that to come here. Do you regret it? I'm like, no, I never think about the Silicon Valley ever. Never has been a day when I've woken up and thought, oh my God, I wish I was investing in that market. I think it's been very, very interesting. It's been very, very good. Interesting could be negative or positive, but for me, it's been very positive. I think I joined India at the time where India was just about to take off. A lot of investors like yourself have seen India in a variety of ups and downs. I've seen many, many cycles, and I was lucky enough to join when all the work that you had put in was coming to fruition in a way. Geo had already been reaching mass adoption. Policy was opening up quite a lot for entrepreneurship and investments. A lot of the first wave of Indian companies had now scaled out, and people from those companies were leaving and either doing investments of their own, advising companies independently or starting new companies. So there was a wave of, I would say, seasoned entrepreneurs as well as young entrepreneurs that were coached by these seasoned operators who are coming back into the market to raise capital and build new companies. So all of those things kind of just felt like the right time, and all three or four things came together for me perfectly well. I couldn't have timed it any better. So I think it's been amazing in terms of how the differences are between this and the US market. Look, I think of founders in three categories. It's not good and bad. It's just a matter of evolution. There are the founders that I think are like top quality founders that have seen the journey before, know exactly what they want to do. They have really a lot of depth in a particular space, have a really sharp point of view, and of course, if they are good storytellers, good capital raisers, even that's cherry on top. And we end up dealing with a lot of those founders that have they're already ready for, let's say, a venture, like a professional venture investment, right? And that quality, I would say, is equivalent to what I've seen in the Silicon Valley. Like the best founders here are at par or even better than the best founders in the Valley. And why I say better is because the risk of failing in India, unfortunately, is still very binary. Right. In the US, you almost sort of say, I scaled mountain X or Y, I broke my arm and I have a scar to show for it. That's like it's a matter of pride. But in the US, it's still, for founders themselves, if they fail once or twice, they become the hottest founders because they now have seen failure, and that makes them humble, open to learning, and they have seen the playbook, right? They know how to, bunch of things that are risk. Can they attract capital? Do they have a brand? Can they hire a team? Those things are now gone off the table. So they become really hard founders to invest in. But in India, I think there is still a bit of a binary risk of, oh, this person founded a company and did not work out. Is he really good? And it's going away pretty quickly now, at least in the upper echelons of venture investing, accelerators and incubators. I feel like that risk is kind of going away very quickly. But that risk makes founders much more hungry to win. So the best in class founders here, I feel like, are putting in so much more of their life and body into this work than I would see elsewhere. So comparably fewer in number, just a matter of volume, but I would say equivalent to higher in quality. Interestingly enough, I was not expecting it, but that's what I got.
No, this is fantastic. The fact that it actually worked out the way you had envisioned, and you were at the right place at the right time. It was also very nice to hear that you see that the quality of entrepreneurs here getting better every day, and some of these entrepreneurs are as good or better than the ones that you have seen elsewhere. And that's something that I experienced myself when I was doing a NetApp evaluation, where they had brought in the short list of startups. Usually you attribute $1 million revenue with about 25, 30 people in India. That's when they get to $1 million in revenue. This was a SaaS company that had actually got only 3 people. There was one founder and 2 engineers. So this is very typical of hitting an ARR as early as that, and then beginning to see how best to expand. So I was very heartened to see that a startup sitting out of Bangalore actually had the ability to do that. So one more question I'll ask you, and then I'll turn to the questions that are coming up in the Q&A box. So last time I spoke to Dave and invited him to be part of the AMA. So he came along with Glass, was the guy who's helping him with all the SaaS discussions and so on and so forth. So anyway, so they had a deck. They said SaaS is it, and we will speak about it for a while, and then we will take questions. So I see all of you seem to be well invested in this. So we've been talking about SaaS from my iSpirit days. I was to help them with that part. We talked about it, and just recently today, or just 2-3 days ago, FarEye, one of the companies from my portfolio in Microsoft, raised $100 million. So it's a great time for us, for SaaS companies in India. So I just wanted to get your view on how this is all shaping up, and what your outlook is for SaaS companies out of India to have that global market share.
Yeah. So, well, first of all, congrats on FarEye, fantastic company. and great outcome for the founders, and long way to go, obviously. But it's always great to see strong founders getting such well capitalized and getting ready for the long journey. So like I've always been a SaaS investor when SaaS was not really as hot or sexy as consumer investing has been globally, right? Because I just don't understand anything else. I just understand SaaS and enterprise really well, and that's what I've spent most of my career in, either as an engineer or a product manager, or then a business guy, and then an investor. I do think that there are some very seminal trends that are happening globally that benefit India specifically. And primarily because we have had a very strong consumer-oriented culture in the past. Given that there are 1.5 billion almost people sitting in this country, our consumer building capabilities are very strong. We are very strong in design, very strong in marketing, very strong in performance, user UI, UX. We're very strong on those things that really matter in the consumer world. Now, what is really happening in the enterprise world over the last 5 to 10 years is that because the internet penetration is growing everywhere in the world, I would say that it has benefited B2C companies certainly, but there's a second order impact that is now happening in B2B. For every Dropbox or a FaceTime, consumer-oriented companies, there is a box which is a B2B version of Dropbox, or a Zoom, which is kind of the B2B version of FaceTime. They're using digital tools to sort of build, test, launch at really high speeds. And then in sort of consumerish ways, they're trying to popularize what tools are being used by business users, right? So the line between business user and consumers are now narrowing quite quickly. And the expectations that a business user has, and FARI being a great example, where it's not enough that you have a clunky software, old school software sitting on an Oracle or an SAP transport management system. It's not enough that it is only desktop. People want the experience that they're having on an Amazon app or a Swiggy app. They want to see where their transport vehicle is sitting on a map, real time, even in a business use case. So this marriage of consumer and business allows the expertise that India and Indian founders have in consumer to bring it to business use cases, B2B companies. I think that's very interesting. The other thing is, I think this is hands down where I really believe that the developer, the software developer is the new buyer for enterprise software. This wasn't the case. It used to be corporate IT 15 years ago, 10 years ago. It is hands down the developer now. They have the most power. And, think of it like this, for the uninitiated. Think of less company-wide MSDN or Red Hat licenses, right? Think more personal, team-wide GitHub licenses or Slack licenses or DigitalOcean accounts, right? That's how the world is moving. Corporate IT spend is now getting disaggregated, and many top-down buying behaviors, decisions are now getting bottoms up, right? A CEO doesn't say, well, okay, $1 million account for so on and so forth. No, check with my developer. Do they like it? Will they enjoy working on this tool, right? Go bottoms up. This is what the behavior is. So when that is happening, which country has the most number of developers outside of US and China? It's India. I would say India probably had, I think last year India overtook the US in terms of number of pure developers. We are number 2 or number 3 now in open source contribution globally as per GitHub. And when you combine all these things, there's a making of very, very strong, powerful ecosystem, where interesting stuff could come out, and we are seeing it. Hasura being an example, the Lightspeed company, got funded by Lightspeed US and a few others in the US, and Postman, fantastic company building a developer tool. We are seeing a lot of very new age companies that I didn't think would come out of this market, but because this B2B, B2C combination is now becoming attractive, product-led growth is now becoming, the normal way to sell. I think Indian founders and Indian companies have a pretty unique advantage in both the expertise they bring to the table and the timing that we are sitting in the middle of. So I'm actually very, very bullish on SaaS and enterprise in the next 10 years.
Yeah, indeed. I think just like we established the IT offshore development as a model and then perfected it over time, SaaS is going through that same evolution, I would think, and will show the way to several other organizations across the world how to do this.
This is a fantastic point. I mean, look, 20 years ago when I was in college, the companies that were inspirational in nature were companies like Infosys, Emphasis, and so on and so forth. And then there was a time when the Googles and the Facebooks became the inspirational companies where the best people went there, fought to get there. And now, it's the startups. That's number one. And second, it was service heavy, and then it became product heavy. Right, when companies like Drishti or Musicma and Zoho came out, now it's all SaaS. Everything is now built on the cloud from day zero, built for the global audience from day zero. It's not like we'll build the poorer version for this market and then build the better version once we have the money for the US market. No, people are here. They're expecting world-class products even now. So I think the world is getting very normalized now, I think, in SaaS.
Indeed. So a little bit of VC logic. Some people want to understand what's the logic behind some of the things. So Naveen Patnaik asks why investors invest even in the startup that make revenue in single or double digits but burn investors' money in millions.
Well, I mean, first of all, investors' money is to burn. Think of it like this: not most companies, I would say, should not raise venture capital. Right, 95% of founders and 95% of companies should not raise venture capital. That venture capital could kill the company. The companies that need to raise venture capital are companies that will be benefited by accelerated growth and market dominance. Okay. And market dominance doesn't happen over 10, 20 years. It could, but nowadays, 10, 20 years is too long a time for an IBM to be created. Right? It takes 2 to 3 years. You have a window of opportunity. And if you were to wait for customers' money to, come in, then you hire people with that money, then you make more money, then you do a brand campaign, then maybe more customers will come as a result of the brand campaign, then you'll make more money, then you hire more people. That will take 4 to 5 years, right? Meanwhile, your competitors would sort of raise whatever, 2 million, 5 million in the early days, right? And they will almost pull the future back into present. In 5 years, you would have spent 5 years of $5 million to get all these people into the company, to build the brand for the company, to do all the stuff that you need to do. But now there's a company out there right next to you who has raised $5 million and can do all of that today. And in today's world, when the behaviors are shifting, if you're not there, people are going to go to somebody else. Think of what happened with COVID, right? If Zoom picked up because it was there, right? Was it the only company out there doing what they're doing? No, there was Cisco WebEx, there is Blue Jeans, and there are dozens others. Video creation, real-time video is now a commodity. You can use an Agora in the backend and create a real-time video communication platform over a couple of weeks now. It'll be clunky, it'll not scale, but it'll work. But Zoom was there. So when behaviors are shifting, you have to be there. If you're not there, somebody else will be. So for them, you have to spend money now to make money later. And not most founders don't find that comfortable. And they are not the founders that should raise venture capital. It will stress them out. It will kill the company, because raising venture capital comes with expectations and demands that some founders don't want, and that's okay.
See, that's the interesting thing. We used to say window of opportunity is closing, it's opening up, it's changing. This was kind of part of the jargon that I was very comfortable with when I was, doing my 2 startups in the US. But for some reason, a lot of that has only started beginning to happen in India today. And, windows of opportunity, the market is just giving you this. This is what you need to make happen. You take a bet, you go after it. Sometimes it works out exceptionally well. Sometimes it doesn't work out. But nevertheless, that's what venture business is all about. And I think that logic is slowly still sinking in. And that's where a lot of these questions emanate, where, what do I do? How come are there, making these investments when there is no profitability to be seen, or at least cannot be seen today? What's the logic, and so on and so forth. So talking about windows of opportunity, I have my colleague from THub, Raghuveer, who has, with COVID changing markets and consumer behavior rapidly, what new attributes are you looking for in a startup and its founders as an investment firm? Is there a change in your investment thesis?
No, there's no change in the investment thesis. I think over a long period of time, things don't change very unexpectedly. They just happen faster. So we certainly think that in certain areas of investments, telehealth or remote work or slash remote tools, um, um, education online, things like that. We always saw that the world is gonna move online. Why? It's just that the world has done this over several other categories. People are finding their life partners online. People have been selling things online. It used to be 20 years ago, if you don't meet somebody, you can't sign you can't sign a contract. But nowadays, people began doing it over emails. This is why DocuSign is so big. And then now it is happening over Zoom, right? So different large categories are now becoming very comfortable getting to the outcomes they were getting to offline, online. And we do think that that's the trend line overall, because it is just, as a society, we have to move towards more productivity. This is the only, this I absolutely believe that this is a, up and to the right movement, that productivity has to go up. It can't go down. And once people taste that parts of being online means higher productivity, not all of it. You can't certainly go out and have a drink with your friend to close a deal, for example. And that might mean that you have some disagreements that will never get resolved. But for the most part, as a society, ignoring the zigzags, the productivity has to go up. And people are realizing that for 90% of the things that I was flying to New York from San Francisco or Bangalore to Delhi, 90% of the time, I don't need to anymore. For the last 10%, yeah, if I am meeting a CEO or I'm meeting for a big deal or the last leg of a deal, 100% have to be there. Otherwise, somebody else who does fly in will probably get the deal. But do I have to go there 10 times in a month? Probably not anymore, right? And not that they expect us to anymore. So that way, I feel like the world is certainly going in that direction. So the answer to the question is no change in thesis. There is some heat on certain parts of the thesis that we thought were kind of warm. And we have deployed more capital in certain categories than we did earlier.
So slightly a tangential question on that. So you're making all these decisions without necessarily meeting them, which was your comfort way of doing that before, and you're not doing that. You will do it if absolutely necessary. I've seen several VCs doing the same, and they have either continue to have the same pace of investments or maybe even greater sometimes, right? Has any of this thing proved to be wrong in the sense that you have not been able to get a physical validation, or has it proven out to be just okay to continue doing business like this, and this is what you'll see post pandemic as well?
I think this is the new normal, Ravi. I see much greater judgment now than offline, because the online ecosystem or whatever, Zoom, it really focuses you on what really matters. You can't flash a great pair of shoes to impress me. You can't smell good. You can't do any of that stuff. It is just about how you communicate a vision, right? It is as close to what you could say writing as it can get, because this is all there is to it. Everything that you know about a business has to be now focused into this, I don't know, 1 foot by 1 foot screen now. That's it. And if you don't do a good job of that, then you don't get funded. So it takes a lot more effort to ignore all the benefits of offline, and you can shake somebody's hand, show some personal warmth, and still bring that online. I have seen much more momentum than I've ever seen in my career, both across India and the US. This is not just me. This is my friends and senior members of the venture community that have been doing it for 20 plus years, saying it, that over the last 20 years, I have not seen this kind of momentum. And there's a reason for it. Earlier, founders that have to raise from talk to 5 or 7 investors would probably, set up meetings, in person. One from SF, one from whatever, one from Bangalore, one from Delhi, from Bombay. And they will set up meetings and they'll keep flying back and forth. And then for the second meeting, maybe fly again. Here, they have just set up one time, one day, 1 hour, one by one. Once you turn the video off, you're in a new city. And they can do all of these conversations over a single day or a single weekend. And what do? We can talk to their customers over a single day. 5 of them, one by one, bang, 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 right? Done. These things were not possible earlier. Now it is. So I see this to be good for the founders. And in a way, it makes our job much harder. But we've been able to deploy far more capital in far shorter amount of time without losing the judgment we apply to these companies, because we've been able to just do more work in a shorter period of time that we were otherwise spending waiting for somebody in the office, somebody stuck in traffic. Let's reschedule. Let's wait for the flight, dates and time. Yeah.
No, that's absolutely wonderful to hear, because the whole efficiency of deploying capital, because there is a lot more capital still available to be deployed here in India to find those startups jostling their way to gaining the attention of the investors, making the right pitches, highly curated, self-curated maybe, to be ready to have those meaningful, productive conversations. I think it's a really good thing that we are beginning to see here. The very fact that so much capital is being raised by some of the startups that are in the right place at the right time, definitely is showing the way for a lot of the aspiring entrepreneurs to get into this quickly. Let me move to the next question. This is Sasi Paul Charles. What is your view of building platform mediated networks out of India? What would be the challenges to building it sitting in India? Is it necessary to shift to a jurisdiction in the US?
I don't know what platform mediated networks are.
Yeah, I didn't either. So I was hoping you would.
I'm sorry, Sasi.
Is Sasi there to talk about this? Shankar, can
Sasi, you can use the raise hand option so that we can allow you to talk.
raise your hand, you mean?
Yeah, the raise hand option.
You there?
Yes.
Go ahead.
Yeah, Sasi, go ahead.
You're on mute, Sasi. We'll figure out what PMF means together. Sasi, you're still not audible.
Can you hear me okay now?
Yeah.
Can you hear me?
Yeah, go ahead.
All right. Okay. Basically, what we mean by platform mediated network is like, okay, you have two sets of networks, which is connected by like Facebook is like, okay, consumers and advertisers, right? Uber is like, drivers and riders. And so basically the basic definition, we call it as like, okay, platform mediated network. In our case, we are actually working on freight logistics solution providers network, right? So wherein we are actually looking at how do we actually connect them together through our platform and make sure that you digitize what actually happened in the passenger world has not yet happened in the freight world as yet. So we are actually
yeah, understood.
So it's actually blockchain based immutability. We bring into bill of ladings and airway bills and enable like short-term credit for invoice discounting, things like that, right? Yeah. So one of the things I keep on hearing all the time is like, okay, move the jurisdiction to US because it's blockchain and you have more risk capital in the US, and Indian VC ecosystem might not support you is what we keep hearing. So I just wanted to actually ask that, saying, okay, is it really, we feel that, like you just said, right, you don't need to travel around, right? So we feel that like we're sitting in India, we can really build this.
Yeah. So
on this.
Yeah. So look, I mean, to answer your last question very quickly, is it necessary to shift the jurisdiction? I'm not a lawyer, so I can't really advise you on legal jurisdiction advice. We have invested in blockchain companies in India, and it all matters whether the value that you're adding or the solution that you're solving for is something that somebody wants to pay for. That's something that you as a founder has to figure out. I've never heard, think of it like this, right? Would somebody say, because you're using MongoDB or Cassandra, you should move to the US? No, blockchain is a database, right? There's no restriction, legally speaking, as far as I'm aware, Kavi and Emtor, that blockchains are illegal to be used. Now, cryptocurrency is a different matter. There's a lot of legal, uncertainty around that. But for blockchain, there is nothing like it. So this is not legal advice, but we have blockchain companies in this market, and then there's never been a need for moving because of that. And can you build platform mediated networks? Yeah, I mean, we already have, right? The way you describe it, I think it looks like it sounds like what Oyo has built for hotel industry, what Ola has built for a transportation industry, and so on and so forth. So yeah, we do have that working in India. My high level thesis on that is, I think discovery-led platforms are kind of old school now. Like, you can't build another OLX, so to speak. So what we see more of coming up online is more full service platforms, in which case you have to almost shape the demand, shape the supply a little bit, right? So what Oyo does, you can't just list like hotels.com does in the US. You can just list your platform on it. But what Oyo does is, because supply is so fragmented and also different quality of supply comes on the platform, they have to go and shape it a little bit. This is true for most of, I would say, this market in India. Maybe it's also true for Southeast Asian markets, where if you are building a network, a platform network of, let's say, teachers, which is what we do at a company called Teachment, which is funded by Lightspeed, you have to go train the teachers a little bit, right? Different languages, different approaches, different curriculums in India. So you have to shape the supply here a lot more than you have to shape the supply in the US, across, even in cars, people, and I know Ola and Uber go and get the car cleaned up and, do a bit of a, quality check every now and then, which doesn't happen as much in the US. So besides that, I think it's totally fine to build. You should build one. We have quite a few big companies coming out of that market now in India.
But that's a very interesting point about shaping the supply. Sashi, to your question, I also think it's also predicated on the market itself. I mean, so most of the startups even consider US as a place to work out of. I wouldn't say jurisdiction. Jurisdiction is a different matter, but market. So the primary motivation for them is, okay, we get customers there much easier. The revenue opportunities are much larger. The margin opportunities are much larger. So those are the primary motivations for us. Now, having been there, it makes us easier to actually raise money from the VCs in the US as well, who seem to understand this market, because the customers around them are beginning to buy from you. So that makes it comfortable for them to evaluate them, even speak to those customers if necessary, understand what the logic behind their purchases are, and what they may even look at, later on, the purchases later on, uh, in their life cycle, right? This may be more applicable to B2B, but that's definitely something that they look at, and therefore, raising money from VCs thereafter also becomes easier. So those are usually the ways that used to happen, and then people made a beeline to the US, B2B SaaS startups, B2B startups, to make this happen. But that's something that you need to consider. We can probably continue this discussion offline. Yeah. Thanks,
Thanks,
Sashi.
Ravi.
So Hemant, coming to your the next question that I have here, it's mostly about IoT. So there are about 1,000 IoT startups in India, in IoT device, hardware, analytic solutions, vertical applications, etc. Do you think there is room for some more new IoT startups in India? And if so, any specific areas that you think they should focus on?
So I'm not deep into IoT. I've seen the market 2-3 years back. But look, whenever somebody asks me a question, is there room for another one? There is always room. And why is that? We are living in a world that is $95 trillion GDP. There are room for lots of companies. It's just a matter of what are you bringing to the table that has not been solved for before. So the moment you get into some crowded markets, you have to always think about, what is my day zero advantage? What do I know that nobody else in the market knows? What can I provide that nobody else is providing today? People will pay money for. And how do I then position my company publicly in the market when somebody asks me, what do you do? And how are you different from these 50 other companies that are doing something similar and saying something similar? What would you say to them? Why are you different? If you're not different, nobody cares. Ravi, you're on mute, by the way.
Sorry. Shankar, any more hands that are raised at the moment?
Yes, we have Mr. Kiran. Kiran, you can.
Kiran, you want to ask your question live?
Hello.
Yeah, Kiran.
Yeah, hi there. This is Naveen Patnaik. I think there is a confusion.
Okay.
Yeah. Hello, Mr. Ravi. Hello, Mr. Hemant.
Hi.
Thanks for your time for all this. So my former question is about investing money on startups which doesn't make a great revenue but burning multi-millions. I think I couldn't have shaped that question properly. My question is the perspective of the investors. For example, we are making a social payments company. I'm in neo banking for Gen Z and millennials. Recently, our competitor has raised 1.7 million USD just with 800 downloads. They neither had revenue model, neither have revenue or anything, but it's our own competitor. I assume that they make money in the future through social commerce. So how did the investors get convinced and kept such a great capital in a company with no revenues and just so many little downloads?
So look, this is the mistake that most founders make. They think that because they are ahead of somebody else today, they will stay ahead of them forever. That is never the case, almost never the case. As a founder, you have only 3 jobs. One is to set the strategy for the company. Where would you want to play? What game do you really want to play? What do you want to say that you are doing to the market? Second is hiring the best people that you possibly can at every single stage. And third is raising capital. You have to do all 3 of these in a venture-backed business as a founder. There's nothing else you need to do right. Everything else has to be delegated to somebody else. Raising capital is a complex piece of the puzzle. I would not dig too deep into it. But what you say to an investor is almost as important as how you say it, right? So if you're saying that I'm 1,000 downloads and they're 800, fund me versus fund them, you're out of the game already. It doesn't matter at that stage if you're 1,000 downloads or 10,000 or even 100,000. People are getting funded because even before they have any downloads. Why is that the case? Why does somebody's story gel with you, resonate with you a lot more than somebody else's, even though that story has a lot many numbers to back it? It's about what strategy are you going after? How aggressively are you going after it? What exactly is your plan? How would you get there? Who do you have around the table? And would you attract the high quality people that is needed to be winning in this business, even if you're coming from behind? And would you be able to attract the high quality investors that are needed to advise you? And sometimes people with 0 downloads get tens of millions of dollars in his business. I mean, if you think Amazon is profitable, you're wrong. I mean, Amazon has never made money in the public markets. It has always been neutral or negative. And Jeff Bezos, 25 years ago, when he went IPO, in 1998 perhaps, he said his first IPO letter was, I'm not going to be EBIT positive for decades. And he still isn't. He spends every money back into the company. Why is Amazon grown, 100,000 times since it's launched? It's because the story is great and the execution is behind it. So, it does matter what you say and how you say it. It's not about numbers, at least at the stages that you are at right now.
Okay, great. Thanks, Hemant.
All right. So let's move on to the next question. This is from Lavanya. With overall disruptions due to COVID, do the venture capitalists have the necessary intelligence or intel on the way ahead of businesses? How are they able to help founders understand the difference between short, medium, and long-term strategies?
So it's not our job to tell the founder how to do their job. If that were the case, then I would be funding myself, not the founders. The question for us is what we do, Lavanya, is we are good at discerning between different founders. Okay. We have seen so many companies play its journey out. We've seen so many founders. We meet hundreds and thousands of founders in a year. We become very good at understanding which founders are better than which others, and why would this founder win, or this company or this business model will win in this market with this approach. That's our superpower. Can we predict the market? Hell no. We love founders who come and prove us wrong. We love founders I saw Farai 1.5 years ago. I didn't think it would be a big company at the time, but now it is. I was wrong. Very happy to admit it. Great for the founders. He had a great vision. I thought the market was very tough. right? I thought the big companies like Oracle and all, they will beat the companies like Farai or Foursquare or many others in the market. But now Farai looks like he's gonna win. Why is that the case? It's the founder. They had a vision, they had a purpose, they had a plan. Somebody believed in them. Now somebody again is believing with them with a lot more money, and now they're executing. So our job is to really discern who are going to really build big companies and why. And we are often wrong, like I was with Farai. But when you're right, you're really right. Our job is not to tell them what to do. Our job is to listen to them, understand, and then discern.
Yeah, in fact, one of the examples I use, Hemant, is there's supposed to be a doctor in Delhi somewhere who sits at the far end of the room. It's almost like about 20-25 feet away, and then he allows people to start walking into the door. And as their gait, the expression on their face, the way they look at you, apparently he has figured out to diagnose what the problem may be. And therefore, by the time he reaches the desk of the doctor's desk, he's ready to already frame what are the things that he may want to ask and get even further along. So I think that's what the investors do very well. But at the same time, I think a lot of the founders that I have seen and I have seen over the last 14, 15 years is the fact that we kind of think that VCs have this, this infinite amount of knowledge and experience and understanding. And therefore, they can tell us what is right or wrong and what should we do or what shouldn't we do. In fact, it's the other way around. I think the fact that these founders are interacting with the customers or potential customers day in and day out, are understanding how the suppliers are going to help them bring the pieces of what they need to put together for these customers. They are talking to the mentors, whatever. So they are in the thick of things. They are there, and if they are able to take all this information, distill it, and create a certain understanding of the world, that is what a lot of us as investors like to go by, because you know better about the markets than we do. What we are now betting on is your ability to do this on a continual basis, and therefore distill out what your strategy should be. How do you build the business? How do you take it further? What you start, and how do you fund it? Whatever, all those things that we will help you with once we understand, you as a founder, the quality of your thinking, quality of your analysis, quality of your strategy, right? So it's easy for us to kind of throw the entire responsibility onto somebody else, because it's so much, I think maybe it's our education system, maybe it's our societal norms, but at the end of the day, as entrepreneurs, as people who will create our own destinies, I think it's important for us to also think, okay, this is what I want to make happen. Is this the right partner? This is the right investor for me to bring into the journey. I think that kind of shift of responsibilities is also an important shift in the mindset. I have seen that happening to quite some extent in Bangalore. In Hyderabad, we are still working on it. All right, so I think we may have a question for time for one more question. Is there a hand that's raised, Shankar, that we can
Yes, we
allow
have.
for?
We have
Yeah.
Mr. Rakesh. Rakesh, please go ahead with your question, please.
Yeah, thank you. Nice to see you, both of you, sir. Hemant sir and Ravi sir. So actually, I'm chemical engineer. So we are working. I just want to know your just point, your suggestions. We are working on agri-tech with farm mechanization and e-commerce fintech also. We have self-invested $100,000 and building since 2012. I mean, step by step started alone, and 2018 small firm and now private limited. We have $30,000 revenue is there. So it is to do the farming sector commercializing it. We are incubated with central government organization also. So we just want some support like that.
So where are you based out of?
Telangana, sir. I'm native of Telangana.
In Hyderabad or?
Yeah, Hyderabad, sir.
Yeah, I think you should get in touch with us. One of the two organizations that I'm associated with can be a good way for you to get the support that you need. So yeah, we can get started that way. I don't know if this is a forum where we can actually answer any specific question of yours. I'm a chemical engineer too,
It's my
but
pleasure,
it was
sir.
a long,
Thank
long,
you.
long, long time ago, and I've not used a chemical engineering since I left IIT. So
Thank you very much. I really happy to know that, because only thing is I can say the people want the technology in everything, but the farmer problems are not solving. We are doing actually in a different way, simplifying process. We are with Vices and startups school also. I just
great,
want.
Rakesh. So what I would suggest is just send us an email, and we'll try to figure out what's the best way to help you and take it forward. Anything quick that we have that we can ask before we wind up?
Uh, we have Mr. Suresh who want to ask a question.
Okay, we'll make that the last question, please.
Yes.
The rest we'll just keep it with us and see if we and THub itself can answer. If there's something that we need to check with Hemant, we'll send him a question to get answered.
Sure.
Yeah, please. Last one.
Suresh, go ahead with the question, please.
Hi, Ravi and Hemant. Good afternoon to see you here. And my name is Suresh, and I'm a founder of MasterPCB.com. And we are actually a hardware startup, and we have been around 5 years now. And the challenge is, should I be considered as a startup? Should I be considered as a mid-range? What stage of investment? What kind of investors or what kind of VCs I should approach?
There's a question for Ravi, so I'll let him take it.
Yeah.
So Suresh, tell me a little bit about where you are in terms of your revenue, in terms of customers, in terms of validation for your product. A little bit more about that.
Yeah, right. So we are product engineering and manufacturing services. It's a kind of a hardware engineering services startup, and we have been offering our services to most of the Indian space and defense companies as on today, because we can see a sustainable model over there. In the private industry, we have issues with the payments, so we are not giving a priority to that. And of course, the next target market to us is like US and Europe. And this was the reason like we were trying to expand, because depending only on Indian defense and space doesn't lead to long-time growth, right?
Yeah.
And depending on Indian private customers, it's a challenge.
Sure.
We have a lot of payment.
I'm not very sure if this is a venture fundable company. Because it has its own model and its profitability that is predicated on how you're able to satisfy your government customers and so on. So I think it also calls for a longer conversation, Suresh. So what I would suggest is you and Shankar set up a time that I can spend a little bit more, or one of my partners do that, and we can take this thing forward. But in terms of raising funds, it may not be the venture capital as a way, but there may be other investors within Telangana that we can connect you with.
Got it.
Yeah, wonderful. So Hemant, on this note, I really thank you for taking the time to spend with us. It's interesting. You're based out of Bangalore, right?
Yes.
Yeah. So you're in Bangalore. I'm in Bangalore. We did this as a virtual thing with a whole bunch of entrepreneurs across India and also in Hyderabad. So this is nice to be able to make this happen. This is one of the boons that COVID has offered us, that we can get the best of the brains to come work with us to make it happen. So thank you very much for making the time. I really appreciate your support.
Yeah, this has been really fun. Yeah, thank you, Ravi. Really fun. Great way to end my week, and it's a great way to spend time with your community. Thank you for having me here.
Thank you, Hemant. Thank you, Shankar, for arranging this.
Thanks.
Thank you so much, Ravi and Hemant, for taking our time and being this wonderful session. I'm sure there are a lot of questions. We are flooded with questions. We are not able to take those, but of course we will get back to you through our emails. And for all the attendees, please do share your feedback. It will appear on your screen as soon as we end the session. Thank you so much. Thanks, Ravi and Hemant. Thank you.